Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad, and the sell-off continues to aggravate, and it's a complete bloodbath on the Dalal Street. If you look at Nifty, it's given up that 25,100 odd levels as of now, and it's aiming to defend 25,000 at this point of time. But yes, if you look at Sensex also, it's tumbled by about 680 points, and nearly a percent decline coming in for the Sensex too. And throughout this week also, we have seen that Sensex has tumbled over 2,000 points itself. But yes, this week has largely been a volatile one on the back of the tariff tantrums that US President Donald Trump had announced on European Union, which was then followed by him backtracking at Davos, saying that for the time being, he has been reached a framework or on the Greenland deal, and that's why he's been holding off the tariffs for the time being. But yes, if you look at the broader end of the markets, they continue to witness a bit of selling pressure. If you look at Nifty Mid Cap and Small Cap Index, both of them are showcasing a decline of about 1.5% itself. And yes, of course, they are underperforming the benchmark index at this point of time. All of the sectoral indices have been reeling under pressure, you name it, banks, auto, FMCG, realty, metals, all of them have been succumbed to this selling pressure, and all of them have turned red at this point of time. So yes, it's a complete bloodbath like I was talking about. It's a complete negative territory for all the majority of the sectoral indices, and just not today, but after yesterday's, yesterday was a bit of a breather, but today it looks like, once again, the markets have taken into its negative trend. But yes, so let's take a quick check of how the top losers and gainers look like on the Nifty 50 front. If you look at Dr. Reddy's, that is topping the charts on the Nifty 50 with about 2% gains, extending its gain from yesterday, given that the pharma major had reported a good set of numbers that came out from the December quarter, and brokerages were also quite appreciative of it. And that's why you can see that the stock has been up by about 2%. Other than that, you can see HUL also showcasing a gain of about 1%, Tech Mahindra with a gain of about 1% itself, Bajaj Auto, Hindalco, some of the other gainers on the Nifty 50. But on the losing end, you can take a look, Adani Group stocks, Adani Enterprises, Adani Ports, both of them on the losing end. Adani Enterprises especially seeing a sharp fall of about 8%. Eternal also extending its loss from yesterday, 5% decline coming in from the food delivery maker. Cipla with about 4% decline. Indigo also not reacting well to its third quarter performance, showcasing a decline of about 3% itself. So yes, all in all, you can see that on the Nifty 50 front, 34 stocks have declined, whereas 15 stocks have advanced at this point of time. But yes, the market texture continues to remain weighing towards the declines at this point of time. And of course, if you look at India VIX, that definitely shows that the markets have been nervous, given that it's up by about 5%. And of course, throughout the week also, we have seen that India VIX has risen by about 25% or so. But yes, to understand the last minutes of the trade and how you should be positioned, I'll quickly go across to my technical expert of the show. We have Vishnu Kant, Assistant Vice President, Research and Advisory at Master Capital, joining us. Vishnu, good afternoon. I mean, after yesterday's small reprieve, markets are back to its selling mode today, and now Nifty has already tumbled by about 2% this week. So how does next week look like? Can we see some reversal going on from here, these levels?
Well, hi Lovisha. Very good afternoon, and thanks for having me on the show. So yes, until a few days back, it appeared that Nifty prices, especially, were trading on a very dicey pitch. But now it has been clear that it's not a dicey pitch; it's a completely bearish pitch. At least for a short term, we can say more pain is, due in the market. Well, so Nifty 50 is currently oscillating a very close to its 200-day exponential moving average. But in fact, unfortunately, we are not going to see any respite in the market, at least for a short term. And we are expecting prices to tumble towards 24,800 if that level breaches. Next support aligns around 24,500. Well, so as long as on the higher side, prices remains well below 25,500, 25,700, the near-term sentiments will remain bearish. But yes, for a long-term investors, this could be a very golden opportunity to get a fresh long positions, because some value stocks from the large cap are bleeding and currently trading near a very good demand zone area. So yes, for a short term prices, there is a further weakness in the prices, and for a long-term investors, this could be an opportunity to create a fresh long positions from the current juncture.
Okay, all right. Fresh long position is advisable at the current levels. That's the takeaway. But yes, broad end of the markets, they continue to see severe selling pressure throughout this week itself. Vishnu, what's your takeaway? Can we see more pain ahead, or is there going to be a reversal going into next week?
Well, so currently Nifty prices are trading very close to it's a recently formed bottom somewhere around 24,900. Having said that, which is broken decisively, the next support aligns around 24,800 and 24,500. So yeah, there is a more pain in the market, and the bad part is that every rally in the market are being beautifully sold. So amid such kind of backdrop, we cannot say we should find any reversal trade in the market. Rather, we should, go short in the market on every rally. So yes, if Nifty prices comes close to 25,200, 25,250, definitely there will be an opportunity to get a fresh sell position in the market.
Okay, all right. But yes, let's talk about more sectoral specific moves. We'll talk about Nifty Metal Index first. It has been the one of the top sectoral performers for the day, and I mean not just this week also, but the past 2 weeks, Nifty Metal Index has seen quite a bit of resilience. I mean, going ahead, how does the chart structure look like to you ahead of budget?
So yes, absolutely. There is only two sector. One is Nifty Metal, and second is PSU Bank. That emerged as a outperformer amid this, tumultuous and overall collapse in the indices. So relatively, we can bet on these two sectors, and we can go stock specific. We can adopt stock specific approach in metal index and PSU banks. If you're talking about the metal index, which is currently trading around 11,487 somewhere around, and it is currently trading above the all key moving averages. And so I believe if there is any correction in the market close to 11,350, 11,300, then definitely we can adopt a stock specific approach in the metal index. And stock specific approach, I believe Nelco and Tata Steel looks are very good for a medium to long term buy.
Okay, all right. Those are the stocks we need to watch out from the metal space. But what about the capital goods and defense, or I mean, railways for that matter? Can we hope to see any pre-budget rally? Because clearly, throughout this week we have experienced quite a bit of a selling pressure, Vishnu.
Undoubtedly, these two sectors you name are a very budget sensitive, sectors, capital goods and defense. So basically, yes, there are many stocks that are looking currently good. And having said that, many stocks from the large cap and value stocks are currently building and trading are very close to their very good horizontal support areas that can be, look for a long-term investing. So from the capital, goods basket, I would prefer to bet on the L&T, which is currently trading a very close to, let me just put a chart. L&T, which is currently trading 3,740 odd levels around and down somewhere around 11% from its recent top. So I believe horizontal support aligns around 3,700 and it is trading very close to that level. So from the better risk reward, point of the view and pre-budget gain, I could say from the capital goods sector, you can bet on the L&T, while on a defense sectors, I would prefer to go with the BEL, which is currently trading somewhere around 408, and it is also trading in a symmetrical triangle formation. So I believe this bullish triangle pattern will take price on a higher side. So one can go long in BEL and L&T as well.
Okay, BEL and L&T is your pick from the capital goods space. But yes, let's also talk about FMCG index. Right now, this index has been seeing a cut of about 0.5%, but it has done well this week as a defensive play. What's the way ahead? Can we see further, up move going ahead?
See, as I said that apart from metal and PSU bank, all sectors are trading in a bearish trajectory, and FMCG is one among them. So it has, witnessed a very good sharp fall in the market. So currently it is trading around 51,600. So it's a completely in a bearish picture. So I will not prefer to, bet on a FMCG, but yes, as a stock specific approach can be adopted in a FMCG, and in FMCG basket, there is only one stock which is looking good, and that is a HUL. So we can go long in HUL. And talking about FMCG, so as long as prices are trading below 53,800, I would not prefer to bet on a complete FMCG basket. Yes, it is beaten down, but it has not given any sign of reversal from the present juncture. So sector as a whole, I would prefer to avoid, but as a stock specific approach, I would prefer to bet on a Hindustan Unilever Limited.
Okay, all right. HUL is something that you're bullish on from the FMCG basket. But yes, let's take a check of the markets. Clearly, Nifty is at day's low level, 1% decline coming in from there. It's also taken up below that 2550 odd levels. And even Sensex, for that matter, has slipped by about 800 points. So yes, clearly the markets have been cautious towards the end of the trading session also. But yes, on the individual movers perspective, let's talk more about DLF. The stock clearly cooled off from its day's high level. It's at the day's low level, but yes, we did see that the company said that they have turned gross debt free for the first time since its IPO in 2007. Now, the company has made this announcement alongside its third quarter results, where they have guided for sales bookings of about 20 to 22,000 crores during the current fiscal. And on a numbers perspective, they have reported a 14% year-on-year increase in consolidated net profit, which was aided by higher income itself. But yes, brokerages have largely remained bullish on the counter, but still the stock has, has given into the sell-off and it's seeing a decline of about 4% itself. Vishnu, what's your view? I mean, brokerages are positive, but the stock has been exhibiting negative trend, and not just the stock, but of course the entire realty basket has been under immense selling pressure this week.
Absolutely correct, Lovisha. Individually, apart from the individual headwinds, there is also a sectoral headwinds in the stock. And from the technical point of the view, in today's trading session, prices slumped below. It's a very good horizontal support that were aligning somewhere around 623. Currently, prices are trading below, that level around 588. So I believe further bearishness are likely to remain intact in the prices, while on the lower side, I'm expecting more pain in the prices, and the losing streak could be extended towards 540. So one can avoid the counter, but if someone already have the counter in the portfolio, so one can maintain a stop loss below 540.
Okay, all right. That's the view for DLF. But yes, since we were talking about DLF being as seeing a decline of about 4%. Let's talk about one of the top Nifty gainers, which is bucking the trend of this otherwise subdued market. That's your Dr. Reddy's. The stock has extended its gains to about the second straight day on the back of strong Q3 results, and even the brokerages were quite positive on the counter, and that's why you can see some buying interest which has emerged in this pharma major. But yes, in just the 2 days, the stock has surged over 7%. Right now, also the stock has seen a gain of about 1%, although it's cooled off from its day's high levels. But yes, Vishnu, I mean, do we expect the trend to change positively for Dr. Reddy's?
Yeah, definitely. I'm expecting prices to continue its winning streak, and the gain should be extended towards 1280. So yes, definitely stay long in the counter, and one can also keep accumulating the counter on fall close to 1200. So yes, go long in the Dr. Reddy's.
Okay, go long for Dr. Reddy's. That's the suggestion. But yes, so let's talk about APL, Apollo Tubes, because that stock also has been doing well. Right now, also the stock has been seeing gains of about 1.5%, and now it's extended the gains to about the second consecutive day. Of course, we did see that the company had reported its quarterly results, which is why the stock also snapped a 3-day losing streak in the process. And with this, the stock is already up by about 7% so far in January itself. But yes, coming to you, Vishnu, for APL Apollo Tubes, I mean, the stock is showing definitely a good breakout. What are you watching next?
Well, Lovisha, so after making an intraday high of around 2070, we have seen some sort of profit booking from the higher levels. But yes, as prices are getting positive cues from the sectoral tailwinds, so I believe this rally and strength in the prices are likely to remain unimpaired. And on the higher side, in medium term, I'm expecting prices should reach towards 2200, 2300 in over the few months or few weeks, we can say. So definitely every dip in the prices will generate a fresh buying opportunity. I believe any fall close to 1950, 1980 will give you an opportunity to create a fresh long positions. Stop loss should be maintained below 1930.
Okay, all right. That's the view for APL Apollo Tubes. Let's move on and talk about Paytm. The stock has been seeing a decline of about 10% as of now. It's at day's low level, but we did see an interesting brokerage note that came in by Investec, where they have initiated a buy call on the counter and given out a target price of about 1550 rupees. So what they are saying is that Paytm's deep tech capabilities and the merchant relationships provide a long-term pricing power, and that would create high switching costs itself, and as a result of which they are forecasting about 23% of net revenue CAGR for FY26 to 28. Vishnu, the stock definitely looks like it's going under a consolidation and a snooze mode. Can we expect more range-bound movement to continue going ahead?
Well, so the fall in the prices has been triggered by some fundamental news, and technically, prices are currently trading a very close to it's a 200-day exponential moving average. But after falling around 10% from the day high, I believe one should avoid until dust has been settled in the stock. So for a short term, I would say definitely one can avoid the counter at this level and let the dust settle in the market, because the result is also due in coming sessions. So first let the result come, and let more development on the graph. Currently it is looking bearish.
Okay, all right. That's the view for Paytm. But let's move on and talk about Cipla. The stock has been one of the top Nifty laggards, and definitely this is coming in response to its weak set of numbers for the December quarter, where profit has more than halved, revenue has stayed flat, EBITDA is also down by about 36%, and margins have seen a sharp erosion. And that's the result of which the stock has seen a sharp breakdown also today. Vishnu, for you, Cipla, how does it look like? Can we expect more underperformance going ahead? So, Vishnu, can you hear me?
Hello. Well,
I think
yeah.
there's.
There is some internet issue. Yes, but I'm quite listening. So,
So I was talking
well, I
about
can hear you.
Cipla.
I can
Yeah.
hear you.
No, I
Am
was
I
talking
audible?
about Cip. Yeah. You're completely
Yes,
audible.
yes, yes, yes.
Uh, yeah. So I was talking about Cipla, that it's seeing a sharp breakdown today in
Okay.
response to its
Well,
weak set of numbers.
So technically, if I look the chart of Cipla of monthly chart, so next support aligns around 1278, 1275. So for a short term, prices are looking completely bearish, and we are not giving any kind of buying recommendation in the counter. So because there is a heightening possibilities that the stock will continue its ongoing, losing streak, and the next support, as I said, that aligns around 1275. So there is completely in the bearish, side. So one should completely avoid the counter at the present juncture.
Okay, exit is the advice for the investors who are invested in this particular stock for Cipla. So let's move on and talk about another stock in focus. That's your Bandhan Bank. It's definitely trading with a good set of gains, 4% gains coming in for the counter, given that it did report an inline set of results, and that has impressed the street at this point of time. If you look at Motilal Oswal, they've upgraded the stock to a buy, and they've given out a target price of about 175 rupees, which implies about 20% potential upside from the current levels. But yes, sir, what they have said is that after 5 years of valuation derating, the current valuations appear quite reasonable. And while they remain watchful of the upcoming West Bengal elections, they believe that the current risk-reward equation is quite favorable for Bandhan Bank. Vishnu, what's your view for Bandhan Bank? Of course, definitely the stock has seen a good breakout today, despite an underperformance over the past few months. What lies next?
Well, so apart from the growing fundamental tailwinds, as you mentioned, there has also been some, technical tailwinds in the market. One, the stock has come above the falling trend line resistance that has been acting as a very crucial resistance for long. Second, prices are currently started to form a higher lows kind of pattern. Third, stock is currently trading above 21 and 55 day exponential moving average. So I believe the recently emerged technical strength in the prices are likely to remain intact, and on the higher side, prices are now all set to extend the rally towards 160. So yes, one can go long in the Bandhan Bank. Stop loss should be maintained below 135, and target will be 160 in days to come.
Okay, all right. That's the view for Bandhan Bank. But yes, sir, let's talk about Coforge also. The stock clearly declined today at the day's low level. 3% fall coming in for the counter, despite the company reported an inline set of Q3 performance. Now, in terms of revenue in dollar terms, that has risen by about 3.5% sequentially. EBIT for the quarter has remained largely flat, but margins have narrowed significantly by 60 basis points. And as a result of which, you can see the stock has been pricing in the negatives at this point of time. Vishnu, what's your view for Coforge? Any levels that we need to watch out from here?
Well, so I have my negative view on a Coforge because prices are, continuously forming a lower highs kind of pattern and trading below all key moving averages. So next support line somewhere around 1600, which if broken decisively, then the prices will extend the fall towards 1520. So one should keep the stop loss below 1600, and if prices fall below that level, one should get exit from the stock.
Okay, all right. That's the view for Coforge. But yes, let's talk about the newsmaker stock of today. That's your Indigo. Definitely, the stock has been not doing well given that it reported a muted set of numbers from the Q3. But that was what the street was expecting because on the back of its operational disruptions that we saw in early December. But yes, even as the underlying demand in core operating metrics, however, they have remained resilient. That's what the brokerages have been appreciative of. But they have trimmed the near-term estimates, remaining broadly constructive on the airline's longer-term perspectives, saying that their scale advantage in balance sheet strength and international expansion could remain as one of the key re-rating triggers going ahead. But yes, the stock is seeing a decline of about 4% as of now. Vishnu, what's your view? Of course, the stock has seen a sharp fall, not just today, but of course from December onwards, the stock has been on a negative trend. So going ahead, in the medium term at least, can we see a good rebound?
Well, so I'm not expecting any rebound in the prices, in fact, because technically the structure is completely collapsed and prices are trading below the all key moving averages. But yes, if someone have the counter in the portfolio, then they can maintain a stop loss below 4600. But one should try to get exit from the counter if prices comes close to 5090 around levels. So technically, there is no strength in the prices.
Technically, there is no strength in the price for Indigo at this point of time. All right, let's move on and talk about another result reaction. That's your Shriram Finance. The stock is down by about 0.2% at this point of time. But yes, we did see that in the third quarter results, the profit has fallen by about 29% on a year-on-year basis. However, net interest income has risen by about 17% on a year-on-year basis. If you look at the asset quality, that has shown a bit of a marginal improvement, with the gross NPA easing to about 4.5%, while the net NPA ratio has also declined to about 2% itself. But yes, Vishnu, of course, the stock did see a breakout after the results, but right now the stock is still, a little bit of sideways, 0.3% declines coming in on the back of its mixed Q3 performance. So how does the outlook look like for the near term?
So outlook is completely bullish after posting a very sharp rally in the market. Prices are just consolidating before any breakout. So I believe on the higher side, prices should approach towards 1100 in days to come. So this is a good entry point in the market because risk reward is in favor. On the lower side, one should maintain a stop loss below 970, while on the higher side, I'm expecting 1080, 1100 will be on card very soon.
Okay, that's the view for Shriram Finance. But yes, let's talk about Ashok Leyland. The stock has hit a new high today amidst the heavy volumes in this otherwise weak market. And in the past 3 months also, the stock has outperformed the market by zooming 40%. Vishnu, good movement today despite the fall that we are seeing in the market. What lies next and any target levels you want to specify here?
Yes, so Lovisha prices are currently trading with a gain of around 1.5% after forming an intraday high of around 199. We have seen some sort of profit booking from the higher levels, but still on a card prices are looking quite bullish, and I'm expecting on the higher side 220 will start very soon. So yes, one can go long in the counter, but yes, stock has given a very overextended gain. So in staggered way, one can deploy money in the counter. So partial buying can be done at a current level, while rest can be done on a fall close to 187.
Okay, all right. That's the view for Ashok Leyland. Let's move on and talk about SAIL. The stock did well today and even hit 18-month high, but clearly right now the stock has cooled off from its day's high level. If you look at the stock, it's trading with about a percent decline. From the day's high level, the stock is down by about 4%. But in the past 3 trading days, the stock had rallied by about 8% itself. Vishnu, what can we expect here from SAIL? Can we expect the the trend of the overall structure for the stock to remain positive going ahead?
Yeah, Lovisha. So ongoing bullish structure will remain, intact as long as prices are trading below 143. So let the prices come down to about that level, 145, 144, and from that level we can again build a long positions because structure is completely bullish. And on the higher side, I'm expecting 160, 162 could be a very quite approachable level in days to come.
Okay, all right. That's the view coming in for sale. But let's move on and talk about Ujjivan Small Finance Bank. The stock is still showcasing a gain of about 1%, but clearly it has cooled off by about 6% from the day's high level. But yes, in the early parts, we did see that the stock did well, given that analysts have raised their target price after it reported a 71% growth in the net profit in third quarter. Not just that, but it has hit an all-time high level in terms of net interest income for the third quarter, and the gross loan book for the quarter has grown by about 21% because the company has seen a highest ever quarterly disbursements. So yes, Ujjivan Small Finance Bank definitely doing well on the back of its steady Q3 numbers. But Vishnu, coming to you from a technical perspective, what lies ahead for the stock, because it's up for the second consecutive day now? Hi Vishnu, can you hear me? I think his feed is frozen. We'll just get back to him. But let's take a quick check of the markets of where we are.
Yes,
It's just, yeah, hi Vishnu. We're just reconnecting back to you. Vishnu, can you hear me once again?
yes.
Yeah, yeah,
Well,
Vishnu, I
am
was talking
I
about
audible?
Ujjivan. Yes, you're audible. Vishnu, I was talking about Ujjivan Small Finance
Yes.
Bank and how the
Okay.
stock is
Well,
expected to
well,
do.
Well, so Lovisha, I was saying the stock was also on my radar yesterday, and in today's trading session, the stock, went up around 10%. But yes, we have seen some sort of profit booking. But still, we have seen a very good breakout on a monthly as well as on a weekly graph. So I believe this is the start or initiation of a fresh bull rally, and stock is now all set to extend this gain towards 80, 85. So for that level, one can definitely go along in the stock, while on the lower side, 58 should be used as an stop loss.
Okay, all right. Let's move on and talk about another stock in focus. That's your Tanla Platforms. The stock clearly did well today after its third quarter performance. We did see net profit rising to about 131 crore rupees. That is up by about 11% on a year-on-year basis. Revenue also grew to about 1100 crore rupees itself in the third quarter. So yes, that's the result of which why we did see a good breakout for the counter also. Vishnu, what's your view on Tanla Platforms and how does the outlook look like in the near term?
So, Lavisha, we have seen a very good amount of volume in today's trading session, and prices also, opened with a gap and currently trading with a gain of around 5.73%. So, I think the stock has been a very beaten down stock, has been a very laggard. So, there has been a very huge participation from the lower levels. So, technically, stock is trading, very close to its a 21-day exponential moving average. In initial hours, prices moved above that EMA line, but retraced from the higher level and currently trading below that level. So I believe there could be some dicey situation in the prices, but the bearishness has not been completely abolished in the counter. On the higher side, I'm expecting prices will again face a selling pressure from the 525, 530 odd levels. So for a long-term perspective, I will not recommend to buy the counter, but for a short term, one can go long in the counter, and the stop loss should be maintained below 460.
All right, stop loss of 260 for Tanla Platforms. But yes, the last rates coming on your screen, where the Nifty 50 has closed with about 200 points decline, 0.8% declines coming in for the benchmark index. And it's back to its sell mode after a reprieve that we saw yesterday. And right now, the stock, the index has taken off that 25,100 odd levels also. Sensex also closing with about 700 points decline. Nifty mid cap index with a sharper decline of about 1,000 points. Bank Nifty also showcasing a decline of about 1% itself. So yes, all in all, the markets have remained quite sideways throughout the day, and towards the last 1 hour or so, we have seen that the selling pressure has intensified in the markets also. But yes, the broader end of the markets, you can see they are succumbing to the selling pressure. Both the Nifty mid cap is down by about 1.7%, Nifty small cap down by about nearly 2% at this point of time, and India Wix definitely up by about 7%. And throughout this week also, the India Wix was up by about 25%, showcasing that markets have been pricing in a bit of nervousness at this point of time. But yes, from a sectoral perspective, all of them have ended in the negative territory. Nifty Realty Index is one of the biggest casualty of the day, down by about 3%. Nifty PSU banks also seeing a bit of a profit booking, 2% decline coming in from there. Nifty Auto Index, however, also showcasing a decline of about 1%. Nifty IT Index, metals, all of them seeing a decline of about 1 to 2%. So yes, all in all, it looks like the markets have remained quite sideways at this point of time. But let's take a quick check of how the gainers and losers have panned out. If you look at from a Nifty 50 perspective, advances, 13 stocks have advanced versus 37 stocks have declined. And in the top gainers list, you can see Dr. Reddy's, Tech Mahindra, HUL, Hindalco, Bajaj Auto, Infosys. Some of these names are dominating the list. But on the losing end, on the flip side, you can see clearly Adani Enterprises, Adani Ports, both of them showcasing a decline of about 10%. Eternal also extending the loss from yesterday's trading session with about 5% decline. Indigo also with about 4% decline. Cipla not reacting well to its third quarter results. We have discussed this stock at length. Geo Financial also showcasing a decline of about 3.5%. So all in all, definitely we are seeing that the markets have remained sideways at this point of time. But yes, coming to you, Vishnu, I mean, just one last question before I let you go. Any top picks that you want to highlight here in this market sell-off, of course, when the investors have been a little cautious at this point of time?
Well, Lovisha, so from my side, I would prefer to pick Equitas Small Finance Bank. And the stock is currently trading around 71, and continuously we have been seeing that prices are showing a very good relative strength. Entire market, be it a small cap, mid cap, and key benchmark indices trading towards south, but the stock moving towards north. So considering the good relative strength in the market, I would prefer to pick this counter, and I believe on the higher side, prices are now all set to extend the gain towards 80 or 82 in days to come. So stop loss should be placed below 68, and buying can be done on a current market level.
Okay, all right. Equitas Small Finance Bank, that's your top pick right now. But with that, we have to let you go, Vishnu. But thank you so much for your time and joining us.
Thank you.
All right,
Have a good weekend.
Thank you. Thank you. All right, after a day of breather, the markets continue to see a fall today. And with that, Nifty has already declined by about 2% this week itself. And of course, Sensex has also slid by about 2,000 points. Majority of the sectors did come under selling pressure, given that Trump's tariff war with EU kept investors on the edge. So not just equities, but the backtrack of tariffs and the uncertainty of such sudden turn of events kept investors flocking towards the precious metals such as gold and silver, which triggered them to mount on record highs once again. Now, the question remains, if next week would we also see similar sideways movement, or can we see indeed a pre-budget rally? So, of course, we also saw today that rupee has hit a record low, and about 6 lakh crore rupees has been wiped out from the markets. So, of course, you can see that the risk appetite has remained quite fragile despite the positive momentum that came in from the global markets itself. We did see that the US markets ended yesterday on a positive note. Even Asia Pacific markets this morning had risen. But overall, for our own markets, nothing seemed to surprise ahead of the budget. Of course, next week we'll be seeing more reports, and of course sectoral expectations. We'll be discussing about what to expect and what to not expect from the budget 2026. But for now, the expectations are quite high that the government will be focusing on the fiscal prudence. This budget, they might announce measures which would aid consumption, support the manufacturing, and accelerate economic growth. But not just that, but not just budget, we'll also be heading into the thick of the earnings season. More results are lined up. Of course, over the weekend, we'll be having Kotak Mahindra Bank and Ultratech Cement, which will be revealing its Q3 scorecard. But other than that, we'll also be having next week, we'll be having more major, results reaction, especially from Axis Bank, Asian Paints, Maruti Suzuki, Marico, SBI Life. All of them will be coming out with their December quarter scorecard next week. So we'll be keeping an eye out for them itself. But yes, clearly what triggered the sell-off was the relentless FII flows. Throughout the January month, we have seen that the FIs have been the net sellers in the Indian equity markets. They've sold stocks which was worth about 20,000 crore rupees. And whether or not DIIs can help offset this cushion is something that we'll watch out throughout the next week also. Other than that, currency trigger volatility has also contributed to the weakness in the equity markets. You can see rupee sinking to a fresh record low itself, and today also the rupee had slipped to about 91.7 levels against the US dollar. So, not just that, but of course, there has been a sharp sell-off in the Adani Group counters also. You can see Adani Green, Adani Enterprises, Adani Energy and Adani Ports, all of them fell as much as 11% in today's trading session. So yes, all in all, it's a very negative setup for the markets. But to talk more about markets and where it's headed, let's quickly go across to our next guest of the show. Joining me is Gaurang Shah, Senior Vice President of Geojit Financial Services. Gaurang, good morning, good afternoon. Markets, clearly, they have been painful this week. Do you expect the scenario to change next week now that we'll also have some budget buzz and more results reaction from India Inc.?
Thank you so much for having me on the show. Good afternoon to all the viewers of Moneycontrol and to you as well. So I think next week is going to be very choppy and volatile. The reason I say this is Monday, 26th of Jan, we have a day off because of Republic Day. On Thursday will be the monthly expiry of FNO segment, and then we'll have Sunday working on 1st of Feb on account of budget. I think it's a little bit of a lethal combination in terms of volatility. And of course, the news flows that are flowing in from the international front will keep the market a little bit, not a little bit, quite choppy and volatile. Some savior could be in form of Q3 earnings if whatever numbers we are going to see going forward from here on are able to soothe the sentiments in the market. But the problem is that we have virtually hit 92 rupees to a dollar, lifetime low of INR against the US dollar. And of course, the relentless selling by our good friend foreign institutional investors. I think if you were to put all this together, I think we are in for a little bit of choppy and volatile ride. But again, remains to be seen, firstly on the earnings front, and secondly, which is more important, is what the Honorable Finance Minister Srimati Nirmala Sitharamanji has to deliver on 1st of Feb. Well, if there is a savior over there, then I think we should see stability coming to the market, or else we should stay choppy for some time.
Okay, got it. Gaurang, what's your early assessment of the results from the India Inc. and how does it make you feel where we would conclude in terms of growth for FY26?
Well, hoping against hope is something that we always believe in, right? So, whatever we've seen up till now, let me say that there are no dark spots or red flags. Maybe one or two cases where numbers have come slightly below the estimates in terms of what we expect from the remaining 25 odd days for the Q3 earnings, whatever remains to be seen. Let's hope that they are a shade better or at least in line with expectation with no major disappointments. Banking, entire BFSI segment, our sense is that this particular sector, both public sector bank, private sector bank, strong NBFCs, microfinance companies, whatever we've seen up till now, they have delivered well. And I think they'll keep on delivering on the better side. Little bit of strain, if you will be from the infra pack, will be from metals pack, given the backdrop of events that we are going through. But otherwise, we expect Q3 to be a shade better than what we've seen in Q2.
Okay, got it. But any sector that you're most excited about going ahead? I know you mentioned banks, but other than that?
Well, so a small disclosure that all recommendations that I'll be sharing on your show this afternoon are a part of our fundamental research team recommendations. Our company Geojit or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we give advice to our clients on similar lines. They might have their investment interest. So other than the entire BFSI segment, I think defense, cap goods engineering, capital market related stocks, cement, autos, and discretionary, both, beg your pardon, consumption driven, discretionary, non-discretionary. These are some primary sectors that we believe would be in the spotlight for all the good reasons.
Okay, got it. But I mean, if indeed the geopolitical tensions ease, do you expect the record rally which has been taking place for gold and silver to take a break? And what would this mean for investors who are already invested in gold or silver ETFs?
Well, so firstly, our understanding is that precious metal will continue its ride upwards for the calendar year 2026 and even beyond. Now, because they have gone up the way they have gone up, there might be bouts of correction which might be very steep, very heavy. The like we saw yesterday, you actually go to see in the spot market, silver prices did not correct as much, but ETFs corrected because of whatever leverage, etc., etc. So if you're a long-term investor, don't worry about short-term, medium-term volatility. They are part of it because they've gone up the way they've gone up. Even last year, 2025, you see the prices of gold and silver, record returns from both these precious metals, even when you compare with other asset classes. So if you're a long-term investor, continue to hold on. You get dips. If you want to add on to it, you can definitely add on to it. In terms of rupee dollar equation, well, the fact remains if the rupee continues to depreciate for some more time, then that inevitably translates into more upside as far as gold and silver prices are concerned because they are base currencies dollar terms, right? So you will have that kind of currency weakness also catching up with upward movement for gold and silver.
Okay, got it. Gaurang, now that IT results are out of the way, what's your assessment of the IT sector going forward? Because many of them are excited that, there could be more translation of the AI-related spends going ahead, and that would make us feel, more formidable towards the growth visibility. Where do you stand in terms of that?
So constructive and positive. We have coverage on from the base of the pyramid to the top of the pyramid, that is small cap, mid cap, large cap. So we have coverage on Science Limited, KPIT Tech, Emphasis, LTI Mindtree, L&T Technologies, Tech Mahindra, HCL Tech, Infosys, and TCS. Some companies are under review, so I will avoid talking or taking those names. But whatever we have seen in not only Q3, but whatever we've seen in second quarter also, I think one particular concern that the street had was the underperformance, and that is not visible. And the strength is visible with the verbatim that some of the management has given in terms of increasing the headcount, investing into AI related, data center related themes as and when they come towards them, and taking the business to the next level. And they have in fact given a good guidance also, some of the companies for the future earnings. So we remain positive, and our sense is that investment time horizon should be at least year and a half plus, given the headwinds that the IT sector is facing currently.
Okay, all right. That's your view for IT sector. But what about the royalty pack? I mean, we've seen that last year also it was quite bruising for them. This year also they have started on a tepid note. Do you think that the weakness is already overdone and now they might see a phased recovery from here on?
So real estate sector will continue to be choppy and volatile. Our sense is that there are some niche and marquee names which has credible performance track record and realizations when you compare to the industry standards. Hoping that there will be some positive news flow in the budget for the real estate sector. We have positive coverage on DLF, Godrej Property, Shobha Limited, Prestige Estates, Upadhyay Reality, and all these 4-5 names. They are frontline names almost in the sector. And we have also heard last year that most of these companies, when they launched their projects, and the project ticket size, the single ticket size was 4 crores to 6 crores to 8 crores. And all these projects that they launched got sold off in record number of time. So and the only problem is in a bad market, real estate sector will lead from the front to take the market down. And in a good market, real estate sector will lead from the front to take the market up. So you need to have a little bit of elevated risk appetite and a longish time horizon.
Okay, got it. But, from the broader end of the markets, we have seen that small caps have suffered under severe selling pressure. Do you think that this is already overdone and now maybe the shift can be focused back to small caps, or is that still some time away?
No, I feel it's still some time away. Look, this is not new to the market. Small cap, micro caps are the ones that attracts a lot of retail investors. And when that attraction turns into congestion and overcrowding, and when the earnings don't deliver, the result is small cap, micro cap will fall off the cliff. And this has been a track record. This is not new to the market, as I mentioned. Well, my advice to all the viewers and investors, if they are inclined towards small cap, not so much on the micro cap, is that pick investment ideas thematically, sectorially. Don't put your finger on any small cap stock and expect it to be a wealth creator or a multi. I think that will be a big mistake. Very sector specific and stock specific.
Okay, very sector specific for talk. But you know, we've seen some of the fund houses, they've opened up some lump sum investments in the space. Do you think that the valuation still, I mean, can maybe make investors to look back at the segment?
Well, I think, look, mutual fund investment is all.
All right, there's a bit of a technical snag that we are facing with Gaurang's audio. But yes, you know, of course, the markets have been on a weak trajectory today also, and of course throughout the week itself. Let's try reconnecting with Gaurang at this point of time. Gaurang, you were saying something about the small cap funds and of course whether or not the valuation warrants a recheck at this point of time.
So here again, you know, in going through mutual fund, small cap or micro cap is not something that will keep you safeguarded, right? It won't create a safety shield around you. Eventually, it will do what the small cap is going to do. So, and of course, you know, when you go to mutual funds, go through a mutual fund SIP route, your investment time horizon is 3B plus, 5+ years, you know, to create that kind of wealth. So it's not like 1 year, 1.5, 2 year kind of time horizon. And there also, I would again repeat, because what I advised directly into investing into small cap into equity markets, you know, that implies to selecting a small cap fund also. So you need to be very, very careful. Of course, with SIP route, you need to have 3 years, 5 years plus kind of time horizon and a little bit of elevated risk appetite. So you can pick and choose depending upon your risk appetite and your desire for returns when it comes to small cap universe.
Okay, got it. Gaurang, just one last question before I let you go. Of course, the budget is around the corner. What are your expectations and definitely what are the market participants hoping this budget could actually surprise them?
As budget comes on 1st of Feb every year, to be very honest, right? And expectations grow louder. And there is very little that our dear Honorable Finance Minister Srimati Nirmala Sitharamanji has to do. But what I have seen over the last couple of years is they have followed the financial discipline. They have used their wisdom. They have created jobs. They have got rid of policies or regulations which are redundant, and they have come out with new one. I'm sure a push towards capex will also be on the mind of the Honorable Finance Minister, and you know, making environment conducive enough for India to reach that next level of GDP growth rate and the next level of $1 trillion economy. And I hope financial discipline will definitely be there.
Okay, all right. Fiscal prudence is something that we'll watch out for. But all right, with that, we have to let you go, Gaurang. But thank you for joining us.
Thank you. Thank you so much.
All right, that's all we have for this edition of Closing Bell. Of course, we've seen about 15 lakh crore rupees worth of market rout today. And throughout this week also, the markets have been on a backward trajectory. Despite yesterday's small breather, Nifty has taken off below that 2550 odd levels, 25,100 odd levels. And of course, Sensex has also tumbled by about 2,000 points this week. But of course, we are heading into a long weekend. We'll be watching out for more result reaction over the weekend. And of course, on Monday also, we'll be watching for more result reaction. But yes, we'll get back with markets on Tuesday. It's the Nifty Nifty monthly expiry day. So some volatility can be expected on that day also. But yes, we'll be back with markets on Tuesday. For now, do have a very happy long weekend and wishing every viewer a very happy Republic Day. Stay tuned to moneycontrol.com for all the news updates and market insights.